Look, we're really excited. I actually think we may see a significant acceleration in prices, particularly in Q4. There is simply more demand from ETFs and treasury companies than there is supply by a factor of 4, 5, 10 in those markets. And I think that will pressure prices higher. We're sticking by our forecast that we made in December 2024. We think Bitcoin ends the year at 200,000. I think ETH hits a new all-time high. I should say August is historically the worst month for crypto. We're doing this on August 1st, so buckle in. But if you step back and look at the macro trends, I think the macro economy is in good place. I think crypto regulation is in great place. I think institutional demand is in an exceptional place. I think the drivers of stablecoin and tokenization and concern about fiat currencies are going one direction, which is up. I think that's a pretty good combination. So we're bullish.
Hougan noticed a major shift. While Bitcoin continues to dominate headlines as digital gold and a hedge against fiat debasement, Ethereum is finding a new champion, Wall Street. Why? 2 words: stablecoins and tokenization. Institutions are starting to realize the real-world potential of Ethereum as infrastructure, not just a speculative asset. Stablecoins like USDC and tokenized assets, real estate, treasuries, etc. are being built on Ethereum, Solana, and other Layer 1s.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Crypto emerged from people who spent their nights, weekends, and every waking hour thinking about this space, which is fine when it's an option and you can invest in it, but you don't have to. But as it becomes something you have to invest in order to just have broad-based exposure, as it effectively becomes part of the global investing benchmark, you have people who need to put 1 to 10% of their portfolio into it, and they can't spend 90% of their time learning about it, right? They need high quality structured products, whether that's index-based that are just capturing the beta, or whether that's active-based, maybe with an AI overlay capturing alpha potential in the space. That's what they have the time to invest in. They don't have the time to pick and choose and follow 50,000 tokens the way maybe people could in the early days of crypto. Things started to change in the start of Q2, and you can see this in the flows into Ethereum ETFs. And the big thing that started to change was people in the TradFi space got really excited about stablecoins, and they started to get excited about tokenization. And so now you have these 2 narratives in crypto. You have Bitcoin protecting you from fiat debasement. So let's call it Bitcoin is digital gold. And then you have Ethereum and other assets linked to stablecoins and tokenization, which is a narrative that Wall Street can get very interested in. We've seen this expressed in 2 ways at Bitwise, actually. One way is obvious, which is flows into the Ethereum ETF. I think they've done more flows in the last month than they did in their first year. But the second way is flows and interest in index-based strategies, because people are like, well, some of that's on Ethereum, and some of it's on Solana, and some of it's on XRP, and some of it's on these other things. And doesn't that make us proximate to what's going on Uniswap and Aave and Ondo? And shouldn't we have exposure to that? Most people are just thinking Bitcoin and ETH, but we are seeing more and more people start to, once you go beyond Bitcoin, the world opens up to you. And I think that's a little bit what's happening now. People aren't thinking through the second order effects of the growth of stablecoins. So I think there's a common understanding now that stablecoins are going to be a big deal, right? We're 250 billion today. Maybe we'll be 3 trillion in 3 or 4 years. Everyone will have a stablecoin. JP Morgan will have a stablecoin. Bank of America will have a stablecoin. Well, everyone. And you're going to be able to see them and your crypto wallet side by side with your bank account, right? JP Morgan just announced a deal with Coinbase where you'll be able to have your Chase bank account and your Coinbase wallet on the same screen. So the lines between those are blurred. And the way people are reacting to that is I want to own Ethereum and layer ones that serve as the infrastructure for stablecoins. Sure, I agree. I do too. Or I want to own Circle, which is issuing. Sure, I do too. But what people aren't thinking is the second order effect. The second order effect is 1 billion people are going to have crypto wallets, which they won't even call crypto wallets. They'll just call wallets. So 1 billion people will have wallets that they interact with every day. And once you have a wallet, you're one step from DeFi, which is why I'm so excited about the growth of DeFi. And I think I think it's dramatically underappreciated. Look, we're really excited. I actually think we may see a significant acceleration in prices, particularly in Q4. There is simply more demand from ETFs and treasury companies than there is supply by a factor of 4, 5, 10 in those markets. And I think that will pressure prices higher. We're sticking by our forecast that we made in December 2024. We think Bitcoin ends the year at 200,000. I think ETH hits a new all-time high. I'm actually maybe even relatively more optimistic on ETH than Bitcoin, because I think it has some catching up to do to where it is from a narrative perspective. But all-time highs for ETH, 200,000 for Bitcoin. I think it's going to be a very exciting end of the year. I should say August is historically the worst month for crypto. We're doing this on August 1st, so buckle in. But if you step back and look at the macro trends, I think the macro economy is in good place. I think crypto regulation is in great place. I think institutional demand is in an exceptional place. I think the drivers of stablecoin and tokenization and concern about fiat currencies are going one direction, which is up. I think that's a pretty good combination. So we're bullish.
Let's talk regulation. For years, the primary barrier to crypto adoption wasn't volatility, it was regulatory risk. Investors didn't want to commit real capital until the legal landscape cleared. That's changing. Quickly, Hougan references recent speeches like that of Paul Atkins on Project Crypto, which signal that us regulatory agencies are moving toward integrating crypto into the existing financial system, not destroying it.
And I think all the people who are like, oh man, I wish I invested in Coinbase in 2015. Like, why didn't I have access to that Series A round? Like, you have that in these DeFi protocols. You have such enormous upside if regulation and crypto wallet adoption and UX align. The growth is just going to be massive, and you can start to see bits and pieces of it. But and DeFi TVL is at a 3-year high, but I still think the market hasn't realized that 3-year high will look tiny in a few years when those three forces align. I think indexes will be a significant portion of the market. Every market needs index strategies and active strategies. That's true in equities. It's true in bonds. And I think indexes could eventually be 20 or 30% of the asset management market inside of crypto. Right now, they're sub 1%. So that's one of the reasons I'm so bullish. Indexes aren't quite the same in crypto as they are in traditional funds. You need more screens to remove assets with risk. Right? As an example, we screened out Luna from our index because we recognized the sort of inherent flaw in it before the market. So you need more of those negative screens, but there's no reason to imagine that crypto won't be like every other asset class, which is indexes will play a big role. To touch on the ETF question, there's actually a large number of ETF people in the crypto market today. Many of the people you see move from TradFi to crypto are ETF people. And the reason for that is that ETFs in the early days were a lot like crypto in its early days, which is to say they were the disruptor and people didn't like them. The media didn't like them. The Financial Times called ETFs weapons of mass destruction. Vanguard didn't like them. Vanguard doesn't let you invest in crypto. They didn't want to do ETFs because they thought they would harm retail investors. There were congressional hearings about ETFs being bad for the American economy. And I think people in the industry saw all that nonsense. And we knew that this was a better, more efficient structure than traditional mutual funds. And we saw it eventually win, right? Today, ETFs are 15 trillion. So I think that's why so many ETF people moved on to crypto, because we've seen this disruption before. We've seen this skepticism before, and we know that better, faster, cheaper ultimately wins. It can take a while. It took ETFs a while. But we know eventually it will win. And so, that's why after I sold ETF.com, crypto was the next place for me to go, because there were just so many parallels and so much opportunity. And, it's why you see ETF firms innovating in this space and ETF people coming into this space. I think we'll be able to do a large number of new and more creative crypto ETPs, which we haven't been able to do, right? We've been able to do Bitcoin and ETH. We're 8 years in to our journey, and that's what we've been allowed to do. All of a sudden, the landscape is going to be much, much bigger. We're going to be able to do things like, I think, staking in crypto ETPs, which is going to be significant. And then it really reduces the barrier to adoption for our type of clients. The biggest barrier to adoption is actually not volatility. Historically, at least according to our surveys of potential clients, it was the perception of regulatory risk. So getting us above that view of regulatory risk is going to be a real accelerant. So it means more products. It probably means more competitors to Bitwise. But it means, I think much more assets, because we'll be removing this regulatory risk. The last thing I would add, having spent yesterday reading Paul Atkins' speech on Project Crypto, is that it's going to require more creativity. So the kind of things that you're working on are now much more fully in frame and much more proximate than they were even last week, right? You can see that the direction that Atkins wants to drive how financial instruments move in the US is aligned with sort of where DeFi is, and where crypto allows you to go. So Bitwise is going to have to be on its toes in order to stay on sort of the cutting edge of innovation, and that's going to be something we think about a lot.
Matt Hougan isn't just throwing out hype. He's laying out a framework for how crypto becomes a core part of every portfolio, how Ethereum and DeFi become financial infrastructure, and how regulation and product innovation will drive the next bull market. The parallels between crypto and the early ETF movement are striking. We've seen disruption before. We've seen skepticism, and we've seen innovation win. This isn't about being early anymore. It's about being positioned.